Hello, and welcome to The Beat with Ben. I'm Ben Huneke, Head of Investment Management at Morgan Stanley. With me today is Ally Wallace, Managing Director and Global Head of ETF Capital Markets. Today we'll explore the key benefits of ETFs, why ETF growth is booming, and what the capital markets team does to meet the needs of ETF investors. Ally, welcome.
Thank you.
Maybe just to start out, take us through some of the benefits that ETFs offer versus other ways people can invest their capital.
Definitely. So, I think everyone's seen the headlines of growth in ETFs, and really there are three main characteristics that are benefits that are driving a lot of that growth. They're often referred to as the three T's. So it's the tradability, tax efficiency, and the transparency. The tradability and transparency are pretty self-explanatory. Tradability, ETFs trade on exchange all throughout the trading day, so you have that continuous valuation and real-time pricing, which investors, are really gleaming towards. And then the transparency, all holdings are transparent on a daily basis. So investors really understand their risk, and especially when they're wrapping a broader portfolio, want to understand what the underlyings are holding. But probably the biggest star of the characteristics is the tax efficiency. So that is something that is often talked about and is really a differentiator for ETF versus other investment vehicles. And it really boils down to how ETFs are structured, how they structure their creation redemption process. So if you just look at an ETF versus a mutual fund, an ETF, when it is being redeemed, instead of having to raise cash in order to meet a redemption, you will in-kind out a basket of securities. And that is not seen as a taxable event. So if you look at that in comparison to a mutual fund, when a fund is having to meet a redemption request, they will oftentimes have to sell securities within the fund, and that triggers a capital gain many times. So really just the structural of the redemption process leads to a more tax efficient vehicle.
Can you tell us, as head of capital markets for ETFs, like you have a front row seat to the mechanics of the ecosystem and how that redemption creation process works to create that tax efficiency. Can you just take us through like how the mechanics and what that ecosystem looks like to actually produce and trade an ETF on a daily basis?
Capital markets, in my title here, capital markets function is really unique to ETFs in general. There's a whole ecosystem of partners that exist in order to have ETFs trade and operate efficiently. So if you think about some of the partners that capital markets are working with, so it's the exchanges, liquidity providers, our own internal portfolio managers, custodians. So the capital markets really sits amongst all those partners and ensures that the ETF operates and trades the way it should. So some of the things you might see my team doing, obviously like getting products up and running on exchanges, securing liquidity providers, working with them to ensure that our products are trading within an appropriate range. The daily liquidity activity, the creation redemption, inflows, outflows are very specific to ETFs, as we kind of mentioned. And then as well as all the way over to client education. So we do a lot of client education on clients that don't have a lot of experience in ETFs. We recently had an institutional client that this was their first time trading ETFs. So it was a soup to nuts type of ETF 101. How does this work? Set up your own, brokerage account. How do they execute? Who do they execute with? So really a full service of different opportunities that we work with clients and our partners with.
So historically, ETFs have been viewed as a passive instrument, but obviously a huge source of growth today is in the active ETF space across both equities and fixed income. So can you talk about that evolution and a little bit how ETFs are a compelling solution, not just for indexes, but also in the active space as well?
Especially the past 3 or 4 years, you've seen such a surge in active product coming to market, but also assets coming with that as well. And really, first, active ETFs have a lot of the same characteristics as the index and those three T's that we just spoke about. So bringing those to the table, the tax efficiency being one of the most foremost, that really leads the conversation. But there was a rule put in place in 2019 that really set the active ETFs on a path for a lot easier accessibility and being able to launch them. It's often called the ETF rule, but it's Rule 6011 that was passed by the SEC. And prior to that, it was quite a laborious process to file, register, and launch ETFs. And so this rule really put index and active ETFs on a level playing field. So in addition to all, the legal work that went into being able to launch ETFs, it also didn't allow previously a lot of instrument usage that was allowed in ETFs, in index ETFs. So if you look at derivatives, that opened the door to a lot of use case in active once that rule was in place.
And for PMs maybe historically who felt a little trepidation about the transparency that comes with an ETFs, like what have you seen in terms of our own PMs as well as the industry, these active PMs being willing to have their holdings out there every day in an active ETF?
Yeah, I think for the first initial years where this was taking off, there was a lot of conversation around should we have, the non-transparent, semi-transparent structure. And really from a client point of view, the client has chosen that the transparent structure is the way that they want to see it. And in that, there was still a little bit of, I think, trepidation from some of the active managers on, showing their holdings on a daily basis. But that, for the most side, has gone by the wayside, especially if you look at it from a fixed income lens. I know from our own investment teams feel really strongly that it's very hard to replicate what they bring to market, what all the portfolio management capabilities, trading, research, everything that gets wrapped up into an investment strategy that we launch in an ETF.
And sourcing, right, from a fixed income perspective, just finding the bonds to buy.
Exactly, which is such a huge aspect to it. So I think that all those worries have gone by the wayside, and you see that across all of the asset managers that are launching. I'd say equities still, there might be some trepidation, especially in some of the managers that have more concentrated strategies. I think that they're still a little bit trying to understand if that's the best for how they want to build their business long term. But again, you see, the likes of very large asset managers that are going out there and launching transparent structures and equities as well. So it's become definitely a lot less of a talking point.
So ETFs have moved from being passive to being active, and now what do you see as the next iteration or the next wave of innovation coming to the ETF world?
I think you continue to see active grow, and in that there's a couple different areas. We're still in the midst of this conversation on share class. When we look at it, there's over 50 asset managers have filed.
This is having an ETF as a share class within a mutual fund structure.
Exactly, yes. And there's actually a couple that have filed for to have off their ETFs a mutual fund off their share class of an ETF.
Okay.
Yes, exactly. So there's a little bit of, I think there's 2 or 3 filings on that. But over 50 asset managers have filed for this right now. And that is still, there's a lot of work to be done from just an industry perspective. As I mentioned earlier, just the whole ecosystem. And that was really just at the capital markets. But then you go to, all the distribution platforms and sales and marketing and everybody that we work with on that side as well. There's just a lot to be worked through when it comes to how do we bring these to market. So the path isn't necessarily defined right now, but is something extremely topical that everyone is keeping an eye on.
So even if the new administration is more amenable to making these approvals, the infrastructure still needs to be worked on. So they're not coming anytime soon.
Exactly. Yes. I think if they get approved anytime soon, there's still a lot of work that needs to be done to ensure that the whole ecosystem can support them.
Awesome. Well, Ally, before we leave, we always like to ask a couple of non-finance related questions from our guests, but thank you for being here. So what career advice do you wish you had at the start of your career that you didn't have?
I wish I could tell her a lot of things. I'd say probably the biggest thing for me was for many years I looked at ways that I needed to improve upon my weaknesses and the differences amongst myself and colleagues. And so I think it wasn't until many years later realized that it's just important to understand what you bring to the table and amplifying your strengths. Just my own personal story, I started out on the trading floor and there was really only a handful of women still back then. And I coupled that with, I was a liberal arts major and I grew up at a cattle ranch. My dad was a cattle rancher.
Fascinating.
Yes, putting me in the middle of New York City on a trading floor was probably one of the more foreign places that I could have been. But I homed in really quickly that I needed to fix all these differences and weaknesses, and so many years spent, either whether it be technical expertise or market knowledge, really trying to improve upon areas that I saw weaknesses. And it wasn't until, I think probably 10, 15 years into my career, really started to see that just amplifying my strengths and understanding what I could do and bring to the table was just as important as a balancing act.
Focusing on the positive as well.
Exactly, right?
Great.
Not always
That's
looking
great.
at it that negative lens. Yeah.
Awesome. Thanks so much for being here today,
Thank
Ally.
you.
So whether it's bonds, equities, alternatives, and transition investments, the Beat delivers the insights and ideas that investors need to navigate any market conditions. Thanks for watching, and don't forget to subscribe to stay updated with the latest commentaries from our investment specialists. Thanks for watching.